Hey, welcome to another edition of I Dig Day Trading. Today we're going to talk about AMC and a little bit about BlackBerry. AMC. So that is something that I had a very modest amount of success with. I could have had an amazing amount of success with it, but let's just say for the last 5 months, like I said, I was doing a lot of studying and trying out different strategies, trying swing trading. And with swing trading, all right, real briefly, day trading, you basically hold a stock for minutes, maybe hours. You trade it within that day. Swing trading can be, the next day, a week, 2 weeks, months, that sort of thing. So with AMC, it was my first time getting back into the swing of day trading. I had done a lot of swing trading in the last 3-4 months. So I was a little rusty. Well, I thought I was going to be rusty, but it felt like my research and studying paid off. So basically with AMC was I didn't realize it was a target by Wall Street bets on Reddit to try to help create a short squeeze. The way I learned about it was I subscribe and I follow to Tim Bowen, and Tim Bowen had a list of stocks on his watch list that he doesn't tell you. It's not a buy list, like buy this stock, sell this stock. Just a watch list that he puts out just so that you have something to study that has a potential to either go up a little bit or a lot. And AMC got on his radar as a potential short squeeze, and so I thought, okay, I'll check it out. So I checked it out, and it was like around 6 in the morning, and it had a lot of volume, a ton of volume, and it was moving. And this is where we are right now. So this was a few days ago. So this was January 27th. So I was watching it at 6. It doesn't show you on this chart for some reason, but in real time it was moving up and up past its close. So when 7 o'clock rolled around, it started to spike, and I went for it, which is a little risky because it was pre-market, but I felt confident because the amount of volume was insane. It was in the millions. I can't remember if it was double-digit millions, but it was definitely in millions with a lot of movement. So there's a lot of liquidity in the pre-market. So I didn't have anything to worry about in terms of getting out of the trade if it went against me. So I basically went in and bought a position at 7:02 in the morning at $9.93. Which is right about here. Let me see if we can make this a little bigger. So I bought in right about here, $9.93, watching the level 2, and it was really hard to follow level 2 because it was just so volatile and moving. And what I did was, which is something I learned from my mistakes back in the summer, was I never had an entry position and an exit position in my mind ahead of time. And you should always do that. I always thought I was kind of doing that, but I really wasn't. And so I said to myself, look, this thing could do what Tim Bowen said, which it did. It went up to $24 that day. It went up to $24 before the market opened. So I thought, well, what I'll do is I'll sell half my position at, I bought it at $9.93. I'll sell it at $10.93, and that's a 10% gain. So without even hesitating, once I bought it, I set up the sell order right away and had it ready. And I watched the stock move up, and when it got up to $10.50, I put my sell in order right around then at $10.93, and it got filled. Literally 4 minutes. I bought it at 7:02. I sold half my position at 7:06, and I did that so that the other half could maybe I feel more comfortable risking for potential of what came later. Did I do that? Not really. So what I did was I waited till about 7:21, and so we're talking like literally 20 minutes later. I watched it. I think you can zoom in a little bit better here. I watched it just do this sideways action, and I got cold feet. It couldn't get back up to 1093. It hit 1050s, and I really wanted to have a pure 10% gain. I didn't want my 10% gain that I just got on half my position to be swallowed up with like a drop down where it goes, and I only make 2% gain or zero, or I break even. I really wanted to protect my 10% gain. So I sold it at $10.79, which is a 9% gain. So I got a 9.5% gain on the trade, which for me I was ecstatic about because I struggled in the summer and in the early fall last year in really trying to get. I was so close, but I always kept missing my entries and exits, and I really got sharp on that. And I wish I could tell you a little bit more about how I guess I explained it to you, but I wish I could give you a little bit more detail on how I came upon that. It's just practice makes perfect. Tim Sykes, another guy that I follow, he always suggests paper trading. Or what I did is I traded with small amounts and you size up later so that like if you really get crushed, you're not losing your whole account. You could start off with just day trading with a couple $100. So like worst case scenario, maybe you lose $50 or you lose at the very worst $200. And everyone has different comfort levels of what you want to lose. I don't like to disclose what I started with and what I'm trading it with right now, but I can tell you when I was a newbie, I was very conservative. On some trades, I would size up on if I felt more confident on. And when you do that, it really teaches you about where your comfort level is because you'll go through some emotional swings, and you'll see how angry you get with yourself and with the lessons you learn, and that is what teaches you how much you're willing to risk. So that's part of the lesson there with that. So I was happy with this play. Of course, AMC turned into, a couple hours later if I had held it, which, I was going to do. I was going to do incremental sells. Instead of selling half and another half, I was going to sell half and then another 25, half of that other half, 25, and then hold on to another 25% for that. But what had happened was I got busy with the day. I was about to get busy with the day where I had to leave my computer, my laptop, and I didn't want to be distracted with checking my phone every few minutes while I was hanging out with my family and getting other things done. So I said, you know what? Let me lock in my 10%. If the thing goes up further, great. I was on the right track. There'll be another one. I'll do it the next time. I mentioned BlackBerry. What can I tell you about BlackBerry? It was another example of how the Wall Street Bets guys kind of went nuts and pushed the stock to parabolic heights. However, what makes this one a little bit more unique is that it's not a stock that's facing bankruptcy that, like some of these other ones like GameStop and AMC and Bed Bath and Beyond, I think. These bankruptcy stocks that a lot of these guys on Wall Street Bets, which is on Reddit, find a way to, they do the research and see that like it's heavily shorted and they can trigger a short squeeze where it goes nuts. This one had good news. It had been, I tell you really quickly, this was one of the first companies I've ever bought. Before I got into day trading, I learned about Robinhood. We're talking 2018, fall of 2018. Learned about it through a coworker, and because I was interested in cannabis stocks at the time, not because I want to get rich, but because it's something I've always believed in, and 20 years ago, I never thought maybe I was hoping maybe in my lifetime before I get way too old that I would actually see the legalization or the decriminalization of marijuana and cannabis for recreational medicinal uses, and it happened. So anyway, got into it, and I joined Motley Fool. And with Motley Fool, it's a very cheap subscription that is a good entry point into learning about more long-term investment, like if you want to hold a stock for 3 to 5 years. And they said BlackBerry, and they gave BlackBerry a lot of it was risky, but at the same time, it had a lot of potential. They do a lot of research. The guys at Stock Motley Fool do a lot of research into the fundamentals of these companies and the executive team. And so and I remember BlackBerry from the 90s and how it was one of the first mobile phone providers and how it was a big deal. And let me see if I can pump up a chart, 2-year chart. I mean, it struggled for a long time because, as you know, Apple kicked its ass, and a lot of them kicked its ass, and no one used BlackBerries anymore. And I bought the stock at $8.92 a share, and I watched it go down and down and down. And I just decided to hold it, because Motley Fool guys, they'll tell you, hold a thing for 3 to 5 years. You're going to see it go up and down, and don't fret. But I mean, it got down all the way down to $3, and I bought it at almost $9, and I was kind of like, man, I am like 65% down on this thing. But I held it, and so often what you should do in those cases is when they get lower is to buy more. But I still like too conservative for that. And I thought, look, I'm not going to sell it. It's one of the first stocks I ever bought. I'm gonna trust Motley Fool's strategy, which is hold for 3 to 5 years, to really test to see if the company does have the fundamentals to recover. And it started to recover, and the recovery is actually this is what happened with Reddit and Wall Street Bets. This helped pump it, but it did get good news. They got a contract, it looks like, with Amazon. They're getting it into autonomous vehicles because I'll tell you really quickly with BlackBerry. What they did was they were smart. When they were making billions of dollars, they invested it properly into really good technology, which is the chip hardware. And I'm not a huge techie. I mean, I'm pretty good at like some of the terminology, but basically the software in the BlackBerry phone, I guess the end-to-end encryption is incredible, and that that technology, that cybersecurity kind of technology, they hung on to that, and they hung on to those patents. So when they were getting clobbered in the hardware department, like phones and that sort of thing, they had the technology that now the Defense Department uses, and autonomous cars now want to use, and they sell, but they sold 90 patents a few weeks ago that helped get the stock to go up. So when they were in the doldrums this whole year, in the past year, and people were getting ready to write them off, they were showing that, look, like, our hard work is paying off. And anyway, in any case, I could go on and on about BlackBerry, but I got up 100% on these guys, and I was thinking of maybe, holding. So what I did was I sold half my position I bought it at $9. I sold half my position at $17 because I watched it hit 20, and then it dipped down to like 16, and when it got back up to 17, I sold it. And the other half position, I thought, okay, I'm going to hold it, for another year. And then I realized what had happened, how it got pumped and how it got targeted, because it was a heavily shorted stock. And I thought, you know what, these and a lot of like Barclays and JP Morgan were giving it downgrades and giving it like price targets like at $7.50, which is way below what it's trading at right now, which, as you can see, it's trading at $14, which is actually kind of low off its highs, which has been 20. So it's like unrealistically high. It could hold these for a long time because it looks like it's going to be a winner, BlackBerry. But I thought, it got back up to 18 and I sold it at 18, and now it's down to 14. So what I'm going to do with this one is I'm going to, of course, watch it, and if it gets down to $10 or even down to $7.50, which JP Morgan and all these other, or Morgan Stanley or whatever, these big banks do these like price targets they think that it should be valued at, maybe I'll buy it again. So anyway, real quick, AMC, BlackBerry, Motley Fool, good if you're into long-term investment or you're trying to learn to get your feet wet. And Tim Bowen, check him out. He's good too, for the swing trading and the day trading. All right, see you in the next video. Take care.